U.S. equity markets delivered their strongest performance in months as the S&P 500 climbed 1.55% and the Nasdaq 100 surged 2.62%, marking the tech-heavy index's best single-day rally in half a year. This powerful rebound was fueled by explosive gains in artificial intelligence stocks and growing optimism that the Federal Reserve will cut interest rates in December, with market odds jumping above 80% following dovish comments from key Fed officials. After a challenging November that tested investor nerves, risk appetite returned with force as Wall Street bet on a perfect storm of technological innovation and accommodative monetary policy. Alphabet dominated headlines with a spectacular 6% surge to record highs above $315, pushing the company toward a $4 trillion valuation after reports emerged that Meta Platforms is in talks to spend billions on Google's proprietary AI chips. Broadcom exploded 11% higher as the chipmaker revealed it expects $60 billion to $90 billion in AI chip revenue over the next 3 years from hyperscaler clients developing custom AI infrastructure. Tesla jumped 7%, contributing to a tech sector rally that demonstrated Wall Street's unwavering conviction in the long-term AI revolution and the company's position to dominate it. Investor sentiment shifted dramatically as Federal Reserve commentary sparked expectations of monetary policy easing, with market-based indicators now pricing in over 80% probability of a December rate cut. Goldman Sachs Research maintains its forecast for a December cut, despite recent hawkish tones from Fed Chair Jerome Powell, projecting a path toward a terminal rate of 3 to 3.25% through mid-2026, with additional cuts in March and June. The CBOE Volatility Index retreated 1.85% to 20, 14 from recent highs above 28, reflecting reduced market anxiety, though caution persists as traders await critical economic data and the Fed's December 9th to 10th policy meeting. Bitcoin traded around $87,000 on November 25, 2025, after recovering from lows near $81,000 but still showing weakness with a 1.54% daily decline amid ongoing volatility. Major altcoins outperformed the flagship cryptocurrency, with XRP spiking on the launch of multiple exchange-traded funds between November 13th to 25th, including offerings from Franklin Templeton, Bitwise, 21 Shares, CoinShares, and WisdomTree. Despite the bounce in select altcoins and increased institutional product offerings, negative ETF flows and cautious sentiment continue to weigh on the broader crypto market as investors navigate persistent bearish pressure and regulatory uncertainty. West Texas Intermediate crude oil fell 2.35% to $57. Analysts project 2026 supply will significantly outpace demand, with oversupply concerns overwhelming short-term geopolitical risks from Ukraine-Russia negotiations and sanctions. Gasoline prices have dropped to multi-year lows, and market watchers expect continued pressure unless OPEC intervenes with production cuts as the cartel considers accelerating supply increases of approximately 500,000 barrels per day starting in November. In stark contrast, gold maintains its safe haven appeal above $4,100 per ounce, up nearly 4% over the past month and more than 57% year over year, benefiting from sustained ETF inflows and institutional demand for stability amid broader market volatility and shifting inflation expectations. The EUR-USD currency pair edged higher to 1.16, gaining 0.27% as the U.S. dollar weakened on surging Federal Reserve rate cut expectations and year-end portfolio rebalancing flows. While European economic growth data remains tepid, the greenback's retreat reflects the dramatic shift in U.S. monetary policy expectations, with dovish Fed commentary overriding concerns about sluggish Eurozone performance. As 2025 approaches its final weeks, markets face choppy trading conditions with uncertainty surrounding key economic data releases, the Fed's December policy decision, ongoing AI sector valuations, and geopolitical developments that could rapidly shift risk sentiment and investment flows across global markets.